Hello, welcome to another podcast of Master Investor. Glad to be here again on another extraordinary talk on money, business, and investing. If you're new to our community, subscribe to our podcast and follow us on all other social media platforms. Look for the logo at Master Investor. My name is Jose. I'm the founder of the company and the brand here at Master Investor. Make sure you click the link somewhere in the description of this podcast to access our digital courses and ebooks to start building the asset column. Bring you the good and bad news of money, the business principles that work in all economies. Today's topic is going to be on using debt to become wealthy and why it's important to embrace the use of debt to invest in cash flow and assets. Today is February 10, 2024, and if you'd like to have this article, you can subscribe to our newsletter. We'll send it to you via email. Mastering the art of acquiring cash flow and assets. Golden rule: there are two types of debt: good debt and bad debt. Good debt goes hand to hand with assets, and bad debt goes to the liability column. So when we look at our financial statement, we understand that we have an income column, an expense column, an asset column, and a liability column, and we can see how is the cash flow flowing through that financial statement of ours. That's why inside of our digital course, How to Build Cash Flow with the Internet Turn Passive Income On, you'll be able to find a personal financial statement that you can download to Excel and fill it in with the information of your finances, so that we can see exactly where we are financially and we can take the right steps towards financial freedom and building true wealth, compounding that asset column, all right? But understand that there are two types of debt, and there's nothing wrong with bad debt as long as we have good debt paying for the bad debt, right? Meaning that the good debt is being utilized to obviously buy assets that are producing positive cash flow and capital gains income, and we're using that income to pay for our liabilities that we have. And each liability has an expense to it, right? It costs us as money. It may be something that we want to have. So there's nothing wrong with having liabilities. Here at Master Investor, we don't tell people to live below their means. We actually encourage everyone to expand and live above our means all the time, because when we do, we get creative, we expand, we look for opportunities, we work smarter, right? And we look for leverage, control, speed, utilizing investment vehicles that work, the ones that we control with our companies. So start a company is important. If you're sitting there and thinking, well, you want to start building wealth, you need to start a company, even if it's selling other people's products to affiliate link, right? Here at Master Investor, we use our company to sell other people's products. We don't use our personal name, or it's not run through our personal name. As a wealthy person, we need to look poor on paper as an individual, because we don't make money through a paycheck like majority of people. We make money through our business, passive income and capital gains income, right? And our assets that we control. So today's title is Harnessing Debt, a guide to use and borrow capital to create wealth. Debt is often viewed as a financial burden, something to be avoided at all costs. However, when managed wisely, debt can be a powerful tool for wealth creation. By leveraging borrowed capital effectively, individuals can accelerate our path to financial independence and build long-term wealth. In this talk, we will explore strategies for using debt to create wealth responsibly. Understanding good debt versus bad debt. Before delving into how to use debt to build wealth, it is essential to distinguish between good debt and bad debt. Good debt is incurred to finance assets or investments that have the potential to appreciate or generate income over time. Examples of good debt include commercial real estate properties, borrowing to purchase income generating rental properties or properties expected to appreciate. Number two, business loans, taking out loans to start or expand a business with strong growth prospects, or buy a business, an existing business. Number three, financial education loans. investing in education or skill development that can lead to higher returns on investment because of the education that we acquire. So investing in seminars, whether it's in whatever asset class we want to become successful in. So there are 5 different asset classes: real estate, business, crypto, paper assets, and commodities. So use credit card, use your loans to invest in your financial education, because that is something that you can get back literally immediately by utilizing the data and applying it. Credit cards, that's number 4. Use the credit card to buy assets that generates enough to pay for the interest and the entire debt back. The asset will leave us with positive cash flow every month after all expenses are paid, including the debt service. On the other hand, bad debt is typically used to finance consumer purchases or non-essential expenses that do not contribute to wealth creation, or maybe it's an item that we want to have in our experience. It could be a luxury item, it could be a car, or it could be a certain house that we want to have, certain mansion, or maybe a private jet, or whatever it is, right? Examples of bad debt includes things that only take money away from us. By focusing on acquiring good debt and before getting bad debt, individuals can harness the power of leverage to build wealth effectively and fast and tax-free, because money is created with debt. So debt automatically is tax-free according to the laws. That's why we encourage everyone to learn how to manage debt, because when we do, we use debt to invest for passive income, to acquire assets, and also some assets will be capital gains income, right? And then we can minimize taxes because we use debt, and also we're investing for passive income and capital gains income. Those are the 2 types of income that are taxed at the lowest bracket. So through business expenses and tax strategies properly established in our business plan, then we can definitely take advantage of the tax benefits that are available to wealthy entrepreneurs and master investors. So there's nothing wrong with having, and if you have bad debt right now, then how do you get out of bad debt? Investing in your financial education to invest in your asset column, right? The whole purpose to invest in your financial education is that if you have money saved up, before you use that money to acquire an asset or something, invest it in financial education regarding the asset that you want to acquire, so that you can make a successful decision, right? So that the investment is successful, it's a sound investment, and you're going to get your money back as soon as possible, and it's going to create positive cash flow over and over again, and it's going to be able to create that without you having to work, right? Because the business or the investment is composed of a system of systems, right? That's what a sound business is. Strategies for using debt to create wealth. Number 1, invest in income producing assets. One of the most effective ways to use debt to create wealth is to invest in assets that generate consistent income. This could include rental properties, dividend paying stocks, or other assets. The income generated from these assets can be used to service the debt while also providing a source of passive income. Number 2, leverage real estate. Real estate has long been considered a reliable vehicle for wealth creation through leverage. By using a mortgage to purchase property, investors can amplify our returns by borrowing a portion of the purchase price. As the property appreciates in value and generate rental income, the investor can build equity and increase our net worth over time. Number 3, diversify investments. While real estate can be a lucrative investment, it is essential to diversify our investments among the 5 different asset classes to hedge for inflation, protect ourselves from down economies, and mitigate risk. Consider leveraging debt to invest in a variety of asset classes, including all the asset classes that we talk about, and alternative investments, such as peer-to-peer lending platforms. Number 4, focus on cash flow. When using debt to invest, prioritize investments that generate positive cash flow. This ensures that the income generated from the investments is sufficient to cover the debt payments and expenses associated with the asset. Positive cash flow investments provide a cushion against market downturns and economic uncertainties. That's why here at Master Investor, rule number 1 is that we focus and we work to build passive income and make money work hard through sound investing. That's rule number 1. Number 5, manage risk appropriately. While leverage can amplify returns, it is also increases risk, but it's not the investment that is risky, it's the investor behind the investment. So when someone asks me, is this investment good or bad? I always respond, are you a good investor? Because it's not the investment, it's the investor. So as long as we have the right financial education with the right team, the right business plan, and all the systems in place with the 8 elements working together to fulfill the mission, then the business will succeed and the risk can be minimized, can be controlled. And calculated, it's a calculated risk. It is crucial to assess our risk tolerance and ensure that we can comfortably service the debt under various economic conditions. In other words, at all times, we need to make sure that when we're using debt, that business or investment will generate the income that will cover for the entire debt service in any type of economy, right? So if it's going to take us 10 years, 5 years to pay the debt back, or 3 years, the entire time it needs to provide that, because it will turn into a liability quickly if that doesn't cover that expense. And now it's not an asset anymore, it's a liability. Okay, we need to crunch the numbers. And good investments, the numbers work, and bad investments, the numbers do not work. Keep it simple, super simple. Consider starting investing today to develop a strategy tailored to our financial goals and circumstances. In conclusion, debt can be a double-edged sword, capable of either enhancing or eroding our financial well-being, depending on how it is used. By focusing on acquiring good debt and employing sound investment strategies, individuals can harness the power of leverage to accelerate wealth creation and achieve financial freedom. However, it is essential to approach debt with caution and diligence, ensuring that we understand the risks and have a clear plan for managing them. With careful planning and prudent decision-making, debt can become a valuable ally on the journey to building long-term wealth. Debt is tax-free because money is created with debt today. Thank you for your time and your business. I appreciate you keeping Master Investor working by investing in your financial education through our products that we offer here and our community. Go to our website, click the link in the description. I'll see you inside of our inner circle. We have a lot of tools and resources and assets that will put you in position to create wealth successfully with the wealthy principles and the core values of a master investor. We are the authentic brand of money, business, and investing. Make sure that you utilize debt to buy assets before you use it to acquire a liability, okay? Start focusing on that asset column, because that's how we're going to be able to escape from the rat race and create true wealth. Stay extraordinary and wealthy. Talk to you on the next podcast. Bye for now. Bring you the good and bad news of money, the business principles of working on economies.